Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 139 for September 15th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be analyzing and looking at your trade ideas. So Jim, the option professor, is sharing his screen right now, and so he'll be showing the charts today. And we also have John Thomas of the Mad Hedge Fund Trader here. And so we're gonna look at a bunch of different symbols that were suggested by the audience today. So Jim is moderating, and I'm gonna go ahead and turn it over to him.
Okay, thanks, David. Hey, John, would you be kind enough to do an introduction for the people that have not been fortunate enough to meet you yet, and what's going on up there a little bit at the Mad Hedge Fund Trader?
Well, I can't imagine after 13 years, no one's ever heard of me, but I'll make an introduction anyway. I've been in the market for over 50 years, ran the equity division at Morgan Stanley for 10 years, was the economist correspondent in Tokyo, Japan for another 10 years, and ran a hedge fund for 10 years, which retired with a 1,000% return. So I now have been running the Diary of a Mad Hedge Fund Trader for 13 years, and we are up 38% so far in 2020, and over the last 13 years we have averaged 35.66% every year for the last 13 years. So we cover all asset classes, long and short. We send out about 300 or 400 trade alerts a year on stocks, bonds, commodities, precious metals, energy, commodities, foreign exchange, and real estate. We're basically doing everything all the time, long and short, and we have a worldwide research team to implement that. We have a flagship letter called Global Trading Dispatch, and then we have industry-specific letters called the Mad Hedge Technology Letter and the Mad Hedge Biotech and Healthcare Letter, where we think all the money is going to be made for the next 10 years. And other than that, I've been trapped indoors for a month now, hiding out from the smoke and the fires at both San Francisco and Lake Tahoe, Nevada.
Yeah.
We have fires everywhere, all around us, all the time. So,
and I'm in Nevada, so you can keep your smoke if you don't mind.
You're in Vegas, aren't you?
Yeah. So, like I say, it's coming right over the mountains there.
Yeah, I'm surprised that the LA fires haven't blown over to where you are.
Yeah, that's where we're getting them. We're getting them from everywhere.
I read in the paper this morning they're even getting smoke in New York City now.
Oh, good. All right, well, let's jump in. Let's jump into these here. The first one is called Square, and Square had a big move. As you can see, there's a 6-month graph with moving averages right there to check out. They're the 15-day, 30-day, and 45-day. What's your comments on Square? Little breakout here today, but what do you think?
Well, Square has been a long-term core holding of our Mad Hedge Technology Letter for a couple of years now. We got in the 20s, and it has, it was doing fantastic. And then the pandemic hit, and all of a sudden the world wanted touchless transactions. So they were in the process of eating the bank's lunch anyway, but now a much larger share of financial transactions are moving over to Square and to their competitor, PayPal.
Right.
And we expect them to go higher.
Yeah, ever since it turned above 40, it's been a buy signal, and it's been all the way up from 30, 40, all the way up here to where we are today, 154. It looked like they tried to hit it down to 130, 135 area, and it held the blue line, the nice moving average there, and now it seems to be trying to go the other way.
Yeah, and by the way, this is a chart for essentially all technology
Yeah, it
stocks
is. Yeah, it is.
this year. And this first dip from that high, that's always the one you buy because there's only two possibilities from here. It goes up to the previous high at 170, double tops and fails, and then you get a much lower low.
Right.
Or we break on through to new highs. And
Yeah.
my bet on all of these is that we kind of churn sideways here until the presidential election and then blast through to new all-time highs once that uncertainty is gone.
Yeah. It could be a 140, 170 trading range until things are resolved. Huh?
All right, so that gives us 50 days,
Some time.
maybe 35 trading days to coin it.
Yeah.
And we went pedal to the metal 2 weeks ago in that sell-off, and we're having one of our biggest months of the year this month.
Let's look at PayPal since that is kind of like the sister stock of this one.
Mm-hmm.
And we'll probably see a ditto. Well, PayPal doesn't look like it's got quite the legs, huh?
No, not as much. And partly that's because PayPal is your worst nightmare to do business with. And we used to use PayPal and switch to Square because they were taking a 3% fee. I mean, they were as bad as American Express. And PayPal's been around a lot longer. And this, the original, guess who originally wrote the code for PayPal in the 90s?
You.
No.
Oh.
Elon Musk.
Oh, that's right. And I got a question for you. I know people who do online wagering, and I asked them how they pay for it, and they say they use PayPal. So do you think the strength in Penn Gaming, DraftKings, William Hill, Caesars may translate into more activity for PayPal in that business?
For sure. It also translates into more business for Bitcoin.
And I thought Disney would get more of a bump out of that news that ESPN is hooking up with Caesars. Let's throw Disney up here just to take a sidebar.
But remember, in the case of Disney, they have this enormous drag in their
the theme parks,
hotels being closed for so long, and their theme parks, I believe, are operating at 25 or 50% of capacity. Of course, the great thing about Disney used to be they could pack people in as many as they could into these parks, and
charging three-hour waits for Space Mountain, that kind of thing.
And we're charging you $25 for a hamburger. So,
and then if you want to get to the front of the line, it's another $100 or something.
Yeah, but that's a bargain at the price. Especially
but that's another revenue source. You create a situation where nobody wants to wait in line, and then they'll pay the premium.
Yeah, that's the only way we'll go to Disneyland now.
Yeah. All right, let's switch over to Microsoft, which is the second one on the list here. And Microsoft lost out to Oracle. Let's see if that was a problem on a deal that probably will never get done, but it wasn't a problem today.
It's probably a blessing in disguise.
Right. But it looks a little heavy here, but it could, if it starts going a little bit above, if we get it going above, 215, 216 again, then I think you're back in the race, huh?
Yeah, this is one of the crown jewels of American tech. Mm-hmm. It's actually less overbought than, say, Apple or Tesla. So we're still recommending this one. And again, sets up the perfect range for the next month and a half.
Yeah.
And then break out to new highs. So.
And the 40-day moving average, that's 45-day, whatever it is, the moving average that's flattening out probably is telling us that a trading range has already developed.
Yeah, and in fact, the 50-day, I don't know if you can bring that up.
I don't do heavy lifting. 45 is enough.
Yeah, the 50 might actually be the real support on this. And a worst case scenario would be 200.
Yeah, it seems like 200 is a big number. Obviously, there's no indication that's going to get taken out just yet.
Let me, I'll pull up another computer and I can get to the 50 and 200 days for that because that may. Well,
I have another thing here. I'll just tell you those numbers and people can use their imagination. Hang on one second.
Yeah, I can tell you in a second too. MSFT.
boom, 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 and then we go over to MSFT.
Yeah, we have a 200-day for Microsoft at 180.
Yeah.
And actually, I would trade against 180 all day long. I don't think it'll
Yeah.
get down that far. And
Yeah.
then the 50 days right around 210.
Yeah. Yeah.
So if
that's
you
where
want
that's
some free money,
pretty much that's pretty close to the 45-day 211, right?
yeah, if you want some free money, buy the 170, 180 call spread for November.
Let's look at Oracle, since that was the other one in the news on the same deal. And again, there's no indication that TikTok will be sold to anybody, but the story here, and you heard a lot of rumblings about Larry Ellison and Trump and all this stuff, and he was getting cozy in there when they had these tech people come in. So it's not surprising that they jumped to the forefront a little bit.
Oracle, Larry Ellison is a bit of a pariah in the technology area in Silicon Valley because he never donates to any charities. He keeps all his money. I mean, the only thing we ever got out of him was a new sailing center when the America's Cup was going on here. It also has been much less volatile than the other tech stocks. So we really haven't done anything in it.
It was in the it was in the 50s for quite a long time, and now it's in the it's at about 61. So it's been an improving stock, but in the realm of tech, it's been a dog.
Actually, it does qualify as a legacy technology stock.
Yeah, it would.
And the other ones in that category will be Cisco Systems and Intel. And if you run the charts on those two, I bet they're going to be fairly similar to Oracle. That said, at this stage of the tech boom or bubble, some might say, you probably want to be rotating out of the Apples and Teslas of the world and into something like an Oracle.
Yeah, because they're more of a value play, and the value is the one.
Yeah, it's a value play.
Right. All right, let's talk about SMH, which is more up your alley because you like the ones that move a lot, and these are the ones that move a lot. So it had a correction from the 185 down to 165, and today it started to peak out the upside, as you can see. What do you think? Correction over?
Well, we have had NVIDIA as our core holding since it was $50. And so, of course, this week, when we find out they're taking over the biggest AI company in Europe, ARM Holdings, we thought we died and went to heaven because that brought us the 10-bagger from our original investment. It went up 10% to 600. So it went up 10% on the day to 600 and is up more than 10 times from our original recommendation. And we think it goes higher. So, so you have NVIDIA, Advanced Micro Devices, and Micron Technology will all keep dragging this index up.
Taiwan Semi too, or what?
Yeah, any kind of sustained economic recovery in the world will exacerbate a global chip shortage. And that's already going on in China. And China also seems to be leading the global economy out of the world because they ended their epidemic first.
Yeah, and the SMH, three of them you got to keep a little eye on here. Is NVIDIA. What do you think of that $35 billion, $40 billion deal with ARM? Going to go through?
Yeah, it was 40 billion. That's what I was talking about. ARM Holdings in
from SoftBank,
Cambridge.
Yeah.
They just bought the biggest pool of AI talent in Europe. So
exactly. But will it go through?
My guess is that governments now are not in a mood to block deals.
Right.
This particular one has to be approved by the United States, the United Kingdom, and China. Well, try getting those three to sit down at a table.
Right. That's why they're talking 18 months.
I think they will let it go through. And also, approval will stretch into the next administration, and they'll be much more technology friendly than the current one.
Yeah. But the stock, coming off of that correction is starting to look like it has some legs. Now, the other two that I thought would be good to keep an eye on, Qualcomm, and they're more up the
Qualcomm
order.
is another value play.
Yeah.
And on this one, can you put up like a 5-year chart on Qualcomm?
Yeah, I have a 5-year chart without trying even. Hold on. As soon as it spits out.
Because this stock went nowhere for years because they were fighting a life and death battle over
with China and stuff. Yeah.
No, with Apple.
With Apple, that's right.
And so the stock went nowhere for ages, and that finally ended. And it now turns out you can't make a 5G phone anywhere in the world without Qualcomm's chips. So
yeah, this thing goes 45 to 65 for many years. And then once it broke above 65, it took the crash to bring it down.
Right.
And that obviously was temporary. And now it's gone through the roof
at 60, again. It was the steal of the century.
Yeah. And the other one, of course, is Broadcom. And that's AVGO. And so 3 names in there inside the SMH to keep an eye on wouldn't be bad.
Yeah, Broadcom is another rotation play. They haven't been really leading this year. So this is another stock where you might want to trim some Apple and Tesla and then go into Broadcom. You can see people have already started doing that. So but it has a lot farther to go. Another one of those, by the way, is Verizon.
Yeah, VZ.
Another value play in this at this moment in this market.
You think better than telephone?
Well, I've always had a prejudice against telephone in that it was one of our great short plays for the last 10 years.
Yeah.
At the end of the day, AT&T is just a bunch of corroding copper. So, and hasn't given any indication they're ever going to do more than that. So this is one of our dinosaurs and one of our short plays is telephone. I don't really see anything happening there.
Hang on a second here so I can get this. Yeah, there we go. T-Mobile would be another one that might have something going.
Yeah, they will do better off because they had a merger in play with
Sprint,
one of the SoftBank companies.
Oh, okay, yeah. Yeah, look at that. That's not great though.
Big move.
Yeah, 80 to 115. Yeah.
Yeah, the merger finally got approved after being held up by the Trump administration for a couple of years. So apparently the ring was kissed, the deal was allowed to get through, and the stock doubled.
Well, here's one that I'm not too familiar with that maybe you are. LKQ?
That is not one of mine.
And it doesn't give me any description about the company. So let me just go over here and see if I can get something.
LKQ Corporation. I don't know anything about this company.
And that's 2 of us. Let's look at the chart, though, and see what the chart says.
Like a boring chart also.
Yeah, it looks like it's trying to go up a little bit. Let's but there you go. Let me just get the chart in line so everyone can see it. It has turned up. It looks like it's trying to go somewhere. And just so we can at least have some concepts, the leading provider of alternative and specialty parts to repair automobiles. So basically, oh, I know. I think I bought parts from these people on something before. Yeah, okay. Yeah, what they do is that you can buy parts that are not brand new from them.
Parts recycling, yeah.
Yeah. So basically, they buy them off salvage yards for a penny, and they sell them to you for $150, and that's how they make their money. And apparently, people are repairing their old cars rather than leasing new ones or something. I don't know.
Yeah, I don't think a junkyard stock is going to get the same margins though as an Apple, a Google, or an AstraZeneca. So it's not really my my neighborhood.
I don't even think a junkyard dog would get those.
Yeah, there's 101 sectors in the S&P 500.
Yeah,
we only really look at about 5 of them.
Well, but somebody, Yeah, somebody owns that stock, so the technicals look like it does want to go a little bit higher at the current time. So the market was above its moving averages, and the moving averages were trying to accelerate. So, it didn't look like a terrible company, but not the same, alpha as others.
Well, you got the 50, and you got the 50 going through the 200, which is a golden cross. That may be why it came up on somebody's screen.
Yeah.
So it'd be a domestic recovery play if they're in the auto industry.
Yeah.
But there are much better domestic recovery plays out there, like the banks.
Yeah. And O'Reilly Auto Parts and all those kind of people. Intel is, got hit very hard because they didn't have that chip. And as soon as they didn't have that chip, AMD and Taiwan Semi went through the roof. And now, now they're trying to get on their feet in this $50 range.
I would be buying Intel down here again as the legacy technology play. Eventually, these guys are going to play catch up when the fangs get exhausted. So this would be one of those, and you can see people are stepping in there. Institutions are stepping in and buying on these down days.
All right, so WVE is the next one up on the parade here. WVE, which is Wave Life Science.
Yeah, no, again, it's not really my lay of the land, as they say. My line of country, that's what the term I was thinking of. And
let me adjust the screen.
Buy things that have nearly doubled in a month.
Yeah, they're headquartered in Singapore.
Unless I know something about them.
Yeah, well, I see that there's something happening here because it is turning up and breaking out, although the direction of the long-term average is still down. Let's go back to the 6-month rather than 5-year. Give us a better perspective. And that, of course, looks a lot better. But, of course, it's had a huge run up to 16. So, obviously, the time to get into this thing when it gets above these lines. So, get in there at 10, get in there at 11, add to it at 12.50, and now go to the bank,
Yeah, Wave Life Sciences is a biotech play.
Yeah.
And there's clearly a COVID-19 angle to this, since they're involved in gene editing.
Yeah. And technically, though, I told you to get on board when it got above all the averages. And so you really was the time to get on board and take your chances between 10 and 12. Up here, it's kind of hard to go in because if anything goes wrong, it'll go right back down to 13, But if it goes right, maybe it's going to 46. That's the way these things go, right?
Yeah, guessing and hoping isn't really an investment strategy that I rely on very often.
All right, here's one that'd be interesting to hear your input on, and that's Kirkland, the gold stocks. My feeling had been that the gold has peaked a bit in the short run, and so have the stocks. But, of course, longer term, that's a different story. But in the short term, let's see what Kirkland does, because it looked like it peaked out around 58, but it's still hanging in there.
Well, we're a big bulls on gold for the long term.
Yeah.
That said, if we get any further downturn in the stock market, it'll take the gold stocks down with it, because gold stocks are stocks first and gold plays second.
Right.
So you're not going to get any downside protection with a gold stock. And if you don't believe me, look at how these things performed in the March meltdown, where they actually went down more than the indexes. So we prefer to just stick with gold itself, because it does give you a lot more protection in a bad market. And we'll just do leverage plays on the long side in gold. Our initial targets in GLD is 2,200. After that, it's 3,000.
One thing I noticed is that the dollar was very strong up at 102 dollar index in March. And then we had the big collapse, and then the dollar started to deteriorate and ended up deteriorating 10%. And that's why the market obviously, and the gold really went nuts after March to the upside. You had a 10% drop in the dollar, but I was thinking that the dollar bottomed here in this 92 range and is trading at 93. And if we get a move on the dollar index towards 95 and really screw people up who are all negative on the dollar, then that could be a catalyst for gold and the stock market to maybe see a deeper decline. Do you have any feeling on the dollar index? Do you think it may?
You know, we trade the currencies all day long, and you know, the charts obviously, you know, we've been bearish on the dollar really all year because the fundamentals are terrible.
Yeah.
You know, with the world's highest corona infection rate, the world's fastest decline in interest rates, and a Great Depression.
Yeah.
So those are all very weak fundamentals for the dollar. That said, if you get a continued sell-off in the stock market going into the election, then you could get a rally off of this bottom in the dollar and the UUP. And if that happens, that would be a great rally to sell into. I think we have much lower lows in the UUP going into next year.
Yeah, the Fed took away the yield advantage with their activities, and they have used 44% of GDP in adding reserves. So, you know, the money supply is off the charts, money velocity is in the toilet, and that's not really a recipe for a strong currency.
Yeah, I mean, the rule of thumb here is you make lots of something, it becomes less valuable.
Right.
So if, you know, the Fed is printing money like crazy, and they are at record levels, that then is your classic currency debasement scenario. And we watched Europe do this for 10 years, and that took the euro from 160 down to 1 to 1.
Yeah.
And now it's the dollar's turn to have that similar type of debasement.
Yeah. But in the interim, on a short-term basis, you know, markets like to have counter-trend rallies, and if it has one, that could be, that could be, sell it. And then if you get a nice drop into 16 or 1700 on the gold, that would be a good place to step up to the plate maybe, huh?
By the way, it is official U.S. government policy now to have a weak dollar.
Yeah, you can tell.
So you have the government and the Fed as a tailwind on any weak dollar play here. And the flip side of that is you want to be buying the daylights out of the Australian dollar and the euro on dips. You know, put up FXA and FXE, and you'll see what
Well,
I'm
let's just show the Australian real quick. And
Australia is our number 1 pick.
Yeah, I mean, because that thing's been steady between 70 and 75, and you think it'll break out of that window and head north?
We see it going to 1 to 1 in 3 years.
Let's go 20-year chart and see what it looks like over a longer term basis.
Well, you'll see my 1 to 1. It was, you know, it was last time we saw it was in 2011.
There you go. There you go. And it is breaking above the blue lines here at 73. So they all haven't crossed and turned into a big uptrend like it did back here when it was at 45 cents. That obviously was good. But yeah, I mean, that's the direction it's trying to go to. And it wouldn't be setting a history going back to 1. It's pretty much
on this chart, you can see there's a giant 9-year double bottom. And actually, if you adjust for the interest rate payout over the 9 years, it actually is a real double bottom. And that is a screaming buy. You know, even if you knew nothing about currencies or nothing about Australia or kangaroos or wallabies, you would still say this thing was going to recoup half of its loss. That takes you from 50 cents back up to 75, which it's done.
Right.
And the next move after that is to $1 even.
Yeah. And that 55 number definitely looks like a panic low, huh?
Right. But if you adjust for interest rates, the real low on this is like 49 on this right leg.
Well, let's jump over to had a big publicity day, I guess, today, Apple. And you know, my feeling is that ridiculous bid up that it had because of the split. You know, like Leon Cooperman was saying, if you give me a $5 bill and I give you 5 singles, you know, it's not making you any richer.
True, but nobody apparently knows that anymore. At least none of the Robinhood traders. So, to them, the same thing happened with Tesla. It just meant more shares.
Yeah.
You could buy for cheaper with less margin requirement.
Yeah.
So
I thought Apple could go back towards 80 to 100 and give you a fabulous buy. Is that possible?
Yeah, it depends on how nasty the election gets.
Yeah.
You could get down to our worst case scenario is $83 in Apple,
Right.
the 200-day moving average.
Right.
And then you want to be buying it with both hands.
Yeah.
By the way, Apple has a long history of 40% corrections.
Right.
So, our old high here is 137. 137 times 40. So yeah, $55 correction at any time. That would take us to, guess what, 83.
Yeah. So that would be a good line in the sand to have some money aside.
By the way, the reason I know about all these 40% corrections is I got caught at them. I got caught on the long side, I got stopped out at 400. I got stopped out at 200. I mean, it's learning the hard way.
A couple of statistics that hit me today was on Apple that only 10% of iPhone users have any wearables. And that is supposedly indicating quite a bit of growth potential in that area.
Yeah, but that's the argument that Apple makes. But the reality is the money is going to be in the 5G phones.
Yeah. And they've ordered 75 million to 80 million, which is up considerably, I think, from the 50 million they ordered last time.
Well, and you have an installed base of 250 million crying out for upgrade. The wearables, it's just the sprinkling on the cake. That's all.
Yeah, but I think it's pretty good margins in that.
Actually, the other play here, which not many people look at, is it's becoming more of a streaming play and a cloud play with their Disney Plus and so on. And they will make a lot of money on that. They're becoming the next Netflix. And by the way, you got to watch the new Mulan. That's to die for. My kids were after me to pay the $30 premium to watch the early release version.
Right. Well, let's just see what else they got up here. AMD. We talked about that a little bit when we talked about Intel. And AMD had a big spike up after that. But what's it done after that? Let's see.
AMD has been kind of a disappointment. That said, I expect it to play a big catch-up game when we get farther into a global economic recovery. AMD has always been the marginal player in the chip world, and it's behaving accordingly. Yeah. There's been a great trade out there to be long NVIDIA and short AMD and Micron. So, and you can see that in these charts.
Yeah, they got a gap at 70 and a gap at 60. Do you think there's any possibility we could go in there under certain circumstances?
Yeah, if the election turns violent.
Right.
The other thing with all these chip stocks, guess who the world's largest consumer of all these chips are? It's China.
Right.
If Biden wins the election and the trade war gets dialed down, you basically want to be loading the boat with every China play that's out there. And why don't you put up Alibaba, BABA?
Yeah, sure.
People have been front running a Biden win through Alibaba, and you can see that in the charts.
Not I put a Baba. And
we don't want Boeing. No.
They give me Boeing for Baba. Boeing for Baba. All right, there's Alibaba. Let's go, Baba. Here we are.
Uh-oh.
I know.
Log in and launch dashboard.
I guess they got tired of giving me a free chart here. Let's see if they'll give me one now.
Hold on. You can't use these things for free forever.
I guess.
Otherwise they hit you for some money. I'm the same way with my service.
Well, they got... Okay, let's go back. This is what I do when I get in a pickle. I go back to one of the charts that was working. See, Boeing's the one goofed us up. If we would never had Boeing, we would have been fine.
Yeah, you know, you've had a move from 190 to 300 in BABA, and you could double from here in any kind of sustained global economic recovery and no China trade war.
Yeah. I know it ran up above 300, I think, right? And then it was
But
kind of
yeah,
heavy.
we just touched 300, and then
it
it
backed
sold
off.
off with all the other big tech stocks.
Right. And basically it looks like a lot of these companies, which is it's holding the long-term average, which comes in there at
Right.
around 263. And if we got back above the red line there, which is 282, it looked like it'd be back in trying to, like you say, it could either test that 300 or take it out, or it could do what you also say is stay in a range between 300 and 270 for a while.
Yeah, you know, all of these charts, they're kind of stuck between a rock and a hard place. They're all trying to decide, well, do we set a new low and then rally hard, or do
Yeah.
we hold here and rally hard?
Yeah.
And it really depends on the news flow from here. You know, what kind of atrocities we get coming out of Washington will determine whether there's another down leg or not.
Koopa software up
Yes,
a point and a half. Oh yeah. Well, it had a day and then it didn't have a day, and now it's holding on and trying to figure out what it's going to do. Momentum obviously very negative, but you know, this would be a neighborhood where it would have stopped, because if you look at the highs over here earlier in the year, they were around 240, and that's about the low. So that's not a bad place to bounce from. But has the bloom come off the rose on this? I'm not that familiar with the company.
I would say yes, but you know, it's not one that I regularly follow myself.
It looks like something that might have had a ridiculous P ratio, and they just all said cash out or something. You know, because it looked like it had gone on a big move, and maybe the valuation just got ahead of itself, huh?
Mm-hmm.
Abbvie is a very solid company.
Yeah, this one we love. Our biotech letter has been following us from day one, and this is one of the 5 leading candidates for a coronavirus.
Mm-hmm.
And that said, the whole sector has been having a mild sell-off because it's going to take a lot longer than people thought to get an actual vaccine on the market. It's not going to happen before Election Day, as a certain person promised, and the stocks are starting to reflect that.
Yeah. In other words, or the money's rotating to the person who's serving up the best story, I guess.
Well, you know, it depends on their progress on a vaccine, and the front runner in that is AstraZeneca.
Yeah, if Abbott Labs rolling over, that wouldn't be good. Let's see if that's doing that. No, see, that's hanging in there. That's hanging in there much better than the other. So if you had the druthers, Abbott or Abbvie, you know, you'd probably go with the Abbott, because they got the tests, I guess, that are supposed to be quick and good.
Well, AST, you know, AstraZeneca, they have the, sorry, I think it's AZN.
AZD, isn't it? Let's find out. AZN, you're right, AZN.
They have the Oxford vaccine, which in the stage 3 trials is getting the best results in fighting COVID-19. And that's the one they shut down last week for 2 days because someone either got sick or died. You know, there are multiple rumors out there.
Well, today it got back on the bicycle, but it looks like, you know, it still has some work to do.
Yeah.
Next one up on the hot hit parade is IBM. Which they have that new CEO. Are you going to bet on the new CEO, or are you going to bet elsewhere?
You know, this is another legacy tech play, and people have been trying to get me to buy IBM for years. But, you know, if Warren Buffett is dumping his position, I'm not going to trade against him. So,
and talk about a flatliner, huh?
I know. Well, it's been like this for ages.
Yeah.
You know, they kind of missed the 2020s.
Well, the new guy's supposed to be good with the cloud stuff, and he was supposed to get us some revenue with Red Hat, right?
Yeah. Didn't happen.
That didn't happen. All right, what about another streamer? Roku, the streamers.
Yeah, I love Roku. one of my most frustrating things this year has been trying to buy Roku on a dip, and every time you try and get it, it runs off again. So we've been in this one since it was 25 in December of 18. That's how far down it got. So 25 to 190, we'll take that.
Yeah, this thing seemed to always have an equilibrium at about 130 to 140. So whenever it got way under 130, it would come back up toward it. And then once it got above 140, it would come back down towards the 130 area as well, 140. And now it seems to be trying to go the other way.
By the way, in March, we were recommending leaps in Roku, and we got about a 500% return on those. Those are 2-year option call spreads.
Leaps on Apple at 80 to 90 is not a bad thing to think about either.
No, we were doing all those things.
Yeah.
We actually put out about 25 leap recommendations in March to get people in, and we got people calling us back with 1,000% returns.
Yeah. I'm going to go off the chart here on one here, and because I've been watching this thing, and I don't know, I'm either a fool or something, but Wells Fargo is an awfully big company with awful lot of clients. And yeah, they had some problems with regards to some of the stuff they did, but and Buffett did sell a lot of it, but he did keep a lot of it too. He still has half the position, and it's not a tiny position. And, if these banks are going to go, I mean, this thing here just seems like it has a lot of flying capability. I mean, it looks like it's got
the trouble is they're still wearing the hair suit from all of the offenses they committed over the last decade. And,
but this guy's firing people, and he's
it really needs a shake-up. And all the good banks, they're also cheap. JP Morgan, Citigroup, and Bank of America. So I'm betting on those three, and it could be years before Wells Fargo finally figures this out. And the reason Warren Buffett didn't sell all of his position is that he had too big of a position. He owned 10% of the company. So what he has left, he probably can't sell with the liquidity at this bottom so low.
Yeah, and he rolled it pretty much over to Bank of America.
Yeah, right.
So let's take a look at B of A. I'm just saying, $20, the lowest it's ever been is 22. Could it go to 30 or 40 if these other ones go back up?
I bought call options on this at $5. So the low was at 20. It was 5. I bought the calls on this, and then the next weekend, Warren Buffett announced he was buying 5% of the company, and we got a 400% move on the calls. If your charts go back 11 years, you'll see that $5 price.
Yeah, no, that's during 08, they were giving away the stuff.
Yeah, put the 20-year chart up. That'll show it.
Sure.
It went from 50 to 5. We shorted this thing for like a year and a half.
There you go.
And
$5.
Turn around and buy. Yeah, that's my $5 price. I remember it well. I have it tattooed on my forearm.
Another one that did that recently in the last little bit or shorter period of time is Freeport-McMoRan. They were giving that.
This has also been one of our long-term favorites. I happen to know they read my letter. And this has always been a...
Here's your $5 price right there. And it was this year.
Yeah, I know, it was in March. And we told people to buy leaps.
Yeah.
2-year leaps on this, and they got 1,000% return.
Yeah.
And
no, when you get big companies like this, yeah. When you get big companies like that, it's not a bad thing to look at.
But this is your classic global economic recovery stock.
Moderna is in the hunt, and let's see if it's in the hunt. What did they have some insiders selling, and people didn't like that very much?
No, what happened with Moderna is they've never brought a product to market before.
Oh.
Okay, and they have a advanced RNA-based technology which has never been tried before. Having said all that, they claim to have a vaccine in stage 3 trials, which is successful. But so far they haven't been able to mass produce it. And the trial they did do, the stage 2 trial they did was 12 people.
I got you.
This was, they've had many headlines on corona cures, but have not been able to scale up on it so far. So that's why you get these huge spikes and then sell-offs afterwards. And on the first spike up to $80, the company announced a $2 billion fundraise, and that kind of left a bad taste in people's mouths. When something quacks like a duck and looks like a duck, it's a duck, except in this case, it's a stock scam, not a duck. So that kind of scared people away. But, we are in wait and see mode on this.
Yeah, looks like it's another one that's kind of on both sides of the coin here. That blue line is kind of flattening out. Maybe it goes, yeah, it's a crapshoot on whether they're going to come up with something. This last one is a healthcare company out of Boston, and I have some history in Boston. So let's see how HQH looks. Healthcare, Tekla Healthcare out of Boston.
Yeah, I don't know this one at all myself. We have other Boston plays we like, but
Kind of flat line.
This isn't one of them. Actually, in the biotech and healthcare area, we love CRISPR, CRSP.
Oh yeah. What's that? CRSP? That was going pretty good. Let's see what's going on.
Yeah,
currently.
that's a leader in gene editing. They're just around the neighborhood in Berkeley, and Thermo Fisher is the Boston company we like, and they essentially supply the equipment and glassware for all the biotech companies. That's TMO.
Yep, and yeah, TMO and Boston.
Yeah, we got a near
Scientific.
double on TMO here also.
Yeah, Boston Scientific is also pretty popular, isn't it?
Right, that's another one.
Yeah,
they're in the same
let's look at
neighborhood as
TMO.
Thermo Fisher.
Yeah. Well, John, we're coming up to the top of the hour. So do you want to tell people if you have any seminars, webinars coming up, or a little bit more about how they can get the newsletter and more information from you?
Well, we have a free research product you can sign up for. Just go to www.madhedgefundtrader.com, and there'll be a free sign-up box there. That gets you our daily hot tips, which are the 5 most important things that happen every day and what to do about them. That's the best value for money service out there. You can't argue with free.
Right.
In addition, we're having a Mad Hedge Traders and Investors Summit, December 1 to 3, and we'll be presenting 30 different traders and 30 different trading strategies, which you can learn about. And that's a 3-day event the first week of September. So madhedgefundtrader.com for the free service. And then you also get invited to the summit if you sign up for that service.
Great. All right. And for Option Professor, we have a weekly market update that goes over the stock market, bond market, crude oil, gold, silver, as well as international. So there's a lot of information. It is free of charge. And all you need to do to get it is go to optionprofessor.com and put your email. And then each week you'll receive whatever we put out. There's other things that we're doing as well that you can learn about at the website or by emailing us at optionprofessor@gmail.com. John, it was a great conversation, as it always is, and I'm going to turn it over to David, who can wrap it up, and hope to see you soon.
All right, thanks, guys. Also, I want to announce that on Thursday, Timing Research and Trade Out Loud will be hosting a 12-hour series of trading psychology lectures. So we got a great lineup planned, and we're going to be starting at 10 a.m. Eastern time. And if you just go to TimingResearch.com on Thursday, this Thursday, September 17th, you'll be able to access that event. And just a reminder, if you go if you search for Timing Research on YouTube or your favorite podcast app or directory, you can subscribe there and get the updates of all, get the recordings of all of our shows and events. So I just want to thank my guests again for today, John Thomas of madhedgefundtrader.com and Jim, the option professor of optionprofessor.com. Thanks, everyone.
Thank you.